Cool. Well, I'm going to start sharing my screen right now, but welcome everybody, as always. We greatly appreciate your time. We greatly appreciate your attention. Thank you for coming out on a Saturday evening. And today's call is going to be focused on advanced trading strategies. We called it advanced trading strategies, but in reality, it is exactly how Austin and I are going to go over how we trade on a day-to-day basis, how we're providing our plays in our analyst chats, and how we're viewing the market. So, Austin graciously extended that I start, but Austin, do you have any, welcoming words for today's call?
Yeah, no, like I said, I appreciate everybody coming here to learn. I think it's really awesome that we have a nice crowd here, and I think it'll be a fun time. I've been I've been kind of working all day. I had my mind in the charts all day, so I'm primed and ready to go. Let's get it.
Awesome. So, I just made a very, very, very short slideshow. The majority of this is going to be shown on our charts on TradingView, but we're going to cover some definitions first. And this is what I'm using to trade today. The indicators, confluences, and here's what they are, my current confluences. Elliott wave theory is going to be the primary framework, but this is more so related to my higher time frame trading. And so is Fibonacci confluences as well. We're going to go touch on these, but guys, we have a lot of educational content regarding these two topics. But if we need to update those, we absolutely could. But we will post the links for those previous calls in the Cam, can we get those in chat? Or Paco, can we get those in chat, please? For our previous biweekly calls where we went over those. We're also going to cover price patterns, horizontal support and resistance zones in this case, and then some secondary indicators that I'm using as well, and candlestick patterns, which we also have some educational content on. So, Elliott wave principle, just a quick overview. It is a socioeconomic framework for understanding market cycles, and it is, in my opinion, as well as stated in Robert Precher's book, the best forecasting tool in existence, and I completely agree with that. It shows how people behave in herds, and therefore how people in herds move the market, and showcases movement in price incredibly well, but something that I've noticed is that it does not factor in timing, which is a key importance as a day trader, which is why it's more so, for me, a higher time frame strategy. And then that also utilizes the Fibonacci sequence, which are price levels based off the Fibonacci sequence based on the movement of waves. And they're used to find areas of reversal, in corrections, and in impulse waves. They work very, very well in combination with Elliott wave framework, and I use them on occasion for my entries in particular. Price patterns. We talk about these all the times. Wedges, triangles, and channels. These are just some of the price patterns you hear about pretty much all of the analysts referencing quite often. And these do play an integral part of my strategy. Again, these are used particularly for me for entries, but also are used for stop loss levels and take profit levels, which we'll also go over on the charts. But it's very important to state that these are not used alone, but when combined with the other things showcased here, they are very, very powerful. And the basis of price patterns is a break or a confirmation of a support or resistance line. So
Yeah, and I want to just piggyback on that and say that, for the most part, price patterns are like the backbone of technical analysis and trading, right? Understanding where you are in a market, if you're in a historically bullish or bearish pattern, realizing these things and understanding these things, noticing these things is very, very important for any trading strategy, right? You're going to find very few strategies out there that do not acknowledge price patterns, okay? So, yeah, important that we know that.
Absolutely. So there's going to be a lot of information in this, but here are some entries that actually I acted on in this. This was the 11th of March, and then the Monday, which was the 14th of March. So the indicators that I'm using on a day-to-day basis are the open range breakout, particularly the 15-minute, which is what you can see on my chart right here. The green line is the upper ORB, and the red line is the lower ORB. Austin, I know you also use ORB. Is there anything that you want to quickly say on it?
Yeah, I have a lot to speak on with ORB. Obviously, I could go into a big spiel about ORB. If you guys don't know what it is, it's open range breakout. And simply all it is the opening range of a specific time frame. So, for instance, Logan is currently on the 5-minute. That is the 5-minute ORB you have, correct? Or
it is the 5-minute, yes.
The 5-minute, right. So the lines that you see right there, the green and the red lines, they're simply displaying the high and low of the first 5-minute candle of the day.
No, this is 15-minute. This is the 15
Okay,
minute.
right. So you're viewing a 5-minute chart with a 15-minute ORB.
Correct.
So that means right. So it'll say technically since he's in the 5-minute chart, the first 3 candles, the high and the low within the first 3 candles displays these lines, right? So if you wanted to simplify it, you could go to a higher time frame like a 15-minute, and it would be the high and the low of that 15-minute candle, and he'll display that here.
Absolutely.
In Logan, obviously, I don't want to speak too much while you're talking about your stuff, but the 15-minute open range breakout, obviously no indicator is like 100% like reliable, and there's obviously going to be fake outs, deviations, and it's not going to work all the time. But in this past, this market that we've been experiencing really since the start of 2022, and even post-COVID as well, but the strength and the power that this indicator has of the opening range has been quite remarkable lately, and I think Logan, you can agree on that.
Absolutely.
So, knowing where we open sets the tone for the day. At least right now, it does. So.
Yeah, and that's the premise of the indicators. There's the most volatility for the day in the first 15 to 30 minutes. So you could very easily remove this indicator off your charts, and you'll see if we just draw the lines from the low and the high of the first 15-minute candle. That is the ORB. So it's very, very simple.
Right. You can manually apply it.
Yep. Yeah, absolutely. But this is actually something that Austin and I came across, I would like to say fairly recently, but I have developed a deep, deep love for the open range breakout. I really can't lie. This is something that I do think everybody should be paying attention to, because I have noticed, especially recently, but I could just be saying that because I haven't been using it for that long. It's been very, very useful in identifying trend for the day, which has been the most important thing now, because we know the market is so variable right now with everything going on. So when we know that, and we know that trends can change intraday, the open range breakout has been really great in identifying those changes in trend, and also just identifying at least part of the day, that part of trend. So it's been very, very useful.
Yeah, and Logan, do you want to, I don't know what trading or charting platforms most of the people in here use. We are really big advocates of TradingView and TrendSpider. We also are starting to experiment with TrendSpider, but me and Logan are still very, very fluent with TradingView. So right now, for the ease of things, we're using TradingView, and there's nothing wrong with TradingView. I highly recommend TradingView. Logan, do you just want to show how you would get the ORB up on the indicators? Because I know there's no built-in
absolutely
for it.
So Austin utilizes the ORB. I'll show you guys really quick. He utilizes the ORB current time frame. That's just to pay attention to different time frames. Open range breakout, like I said, I use the 15-minute in particular. So the one I use is the ORB 15-minute by Equity Durai. And, we both have opinions on this. I find the 15-minute is more reliable, at least for what I'm using it for. So I only look at the 15-minute.
Right.
And then if you're using Thinkorswim, if you go on thinkscript.com, you just Google ORB ThinkScript, you'll find the indicator there as well for your Thinkorswim. Awesome.
Guys, again, one last thing. If you don't want the indicator, you can manually apply these things. It's
very easy.
Right?
It's very easy.
So, if you have free TradingView and you're limited with indicators, no sense in applying an ORB indicator, because you can simply wait for the first 15-minute candle, the first 30-minute candle, the first 5-minute candle, draw a horizontal line from the top and the bottom, and that's your open range. So no need to waste an indicator spot on it if you have free TradingView.
Yes. And the second indicator that I've been using a lot recently is the anchored Vwop. This is actually something I found in a book that I'm reading, which was very interesting. I started testing it out, and it's funny enough, it's actually created by the gentleman over at TrendSpider. And all it does is it anchors Vwop to the open of day. So rather than looking at a Vwop that's spanned over the entire length of time that the asset's been charted, the Vwop is anchored to this open of the day, which has proven to be very, very useful for me. Unfortunately, on TradingView, the Vwop anchored does not go back in time. You can only see it for the current day. So we'll look at it from the close on Friday. But when I'm looking back at these past trades, we unfortunately will not be able to reference it, which is quite silly.
Yeah.
But
the only way you can do it is if you use the replay tool, which is kind of, it's kind of out of the way. But, yeah.
And then the last indicator that we're going to bring up, actually the MACD is something that I'm also going to touch on, but the other main indicator I'm utilizing on my price is EMAs. So I have this indicator that just has multiple EMAs, so I don't have to add each one individually. I'm utilizing the 8 EMA, the 21 EMA, and the 50 EMA primarily, but I also have the 200 and the 800 overlaid as well. And I'm only really utilizing this because, as you can see, it does make the chart a little bit not as pretty. but I am only really looking at these when I'm in a trade looking for dynamic support or resistance. The 8 EMA that I have found has been great for trend following. As you can see here is a great example. We do not even break above the 8 EMA. It looks like we get close here, but we never close a candle above that until right here, which would have been a great exit when looking at this trade. So
That's beautiful. That specific price spot right there is actually a trade I will be going over today. Yeah.
Oh, perfect.
Very, very nice. Yeah.
Yeah, but the 8 EMA and the 21 EMA are great for trend following. I find that price will often reverse back to the 21 and the 8 before continuing. Like we usually look for a 38.2 retracement, which is a high probability area of reversal. These EMAs are another way of looking at that. So just to give you guys a quick idea of what I'm using the ORB for, because we were just talking about how amazing it was, I'm utilizing it for breaks and or retests on the 15-minute chart primarily. I'm not going to look to take a trade. For example, if we break it on the 5-minute but not the 15-minute, I'm looking for a 15-minute candle close for the break. A retest can be any time frame. Here's a retest example on the 5-minute that we had. Again, this was on the 11th of March, where as you see, we break to the downside of the lower ORB. Definitely have a 15-minute candle close here, right? This is a 5-minute chart. And then we bounce back up, have this retest, quickly bounce off. This is an engulfing candlestick, which is utilizing that candlestick analysis part. This engulfing candlestick, and the reason it is engulfing, just to quickly touch on that, is because it completely engulfs the last candle, right? The entire price point of the last candle. That is a great indicator for a bounce off of a certain level, especially when you're keeping in mind that lower ORB that we're bouncing off of. So this was a great example of a trade that we did take, just a very clean bounce off of the lower ORB once we broke to the downside. And then here's another example where we're utilizing price patterns. This is just an example of a wedge that we have formed on the lower ORB. You see we get a close on the 5-minute. This was also a 15-minute close. This was 12:45, as you can see right on the bottom there. And this was a great play to the downside with a tight stop loss that you could have taken. Stop loss in this case would have gone above this resistance line, the last touch to this resistance line here. And as you can see, this trade went for over 2R, which was a very, very nice trade, down to this support zone, which is bringing in the horizontal support and resistance lines. Yeah, but just to bring this back up, I didn't say the stop loss for this trade. For this trade, I would have placed the stop loss. If it was a 0 DTE contract and I had to be very careful with timing, I would have placed it right above this last high. But if I had some more time on the contract, I would have placed it above the upper ORB, because you can often see price come back in and then come back down without breaking above. So that is just where I would have put the stop loss there. So, Austin, I don't want to take up too much time myself. We just went over a couple of concepts, and I know you touched on some very similar concepts, so I'd like to pass the torch off to you for the time
Let's do it. Yeah, so I'm going to be a little bit different. I'm going to show a series of charts and trades that I acted upon, both wins and losses, and just overall how I view the market, because I think that's very important. And, you should start every trade by looking at the big picture and zooming in, right? Understanding where you are. But without further ado, I'll share my screen and you guys can go ahead and take a look. So again, these are going to be trades that I did act upon in this Discord, both wins and losses. And I'm going to kind of show you what I was looking at during it and the ideology that I had going into the trade. So let's go ahead and add session breaks, because we want to understand where the market opened. So this was back, and this is on one of the examples that Logan showed. And right here, I do have the 15-minute ORB, the open range breakout, manually applied with these yellow lines, right? So this is the high of the 15-minute candle and the low of the 15-minute candle, even though we are on a 5-minute chart. And earlier in the day, we did see that we were bullish, right? We saw that our MACD did cross bullish on the 5-minute. Guys, if you don't know, moving average convergence divergence, yes, it's like a very stereotypical thing for new traders and all traders to have that on their chart. But guys, there's nothing wrong with having a MACD on your chart. I use it all the time. I think it's a wonderful indicator to have, and it doesn't hurt you by having it. So the MACD is always a good indicator to look for, what general momentum is doing. And we did open up the day. We maintained, chopping around between our open range, and we saw a bullish 5-minute MACD cross, right? And our RSI was on the lower side, so this could potentially set up for a nice run to the upside. Obviously, we did end up running to the upside quite aggressively in the morning, and this could have provided an entry if you were just to go long right at the 15-minute ORB, but that was not the trade that I capitalized on. What I did is I quickly noticed that we were participating in a rising wedge. If you guys aren't aware, that, a rising wedge is typically a bearish pattern. Can they break to the upside? Yes, absolutely they can. But the probability is that they will, break to the downside, right? It's bearish. And on top of that, the trend was already bearish. We can see that we entered into this rising wedge with bearish price action. So I did expect, even before we broke to the downside, I did expect that we would see a decline in price. I thought that this rising wedge would break to the downside. And right over here, I heard, I know Logan Silver mentioned the 8 EMA. I'm a little bit different. I am using the 8 EMA here, but for every EMA I have, I also have an SMA. And for every SMA I have an EMA. So I'm pretty much always looking at both the simple moving average and exponential moving average of a current of a time frame, right? So on a moving average period, right? So I have the 8 SMA and the 8 EMA. If I want to single these out, we can make the SMA white. Right. Okay. So we can see there what we're kind of looking at. And the crosses in these things aren't too significant, but in my opinion, that's just kind of how I go about things. I like to have a pair of moving averages, like a band, I guess you could say. And you can see that in this rising wedge, man, throughout the day, we rode it pretty good, right? We didn't really close any candles below, and we were rising pretty quickly on the 5-minute chart. And then as soon as we broke our rising wedge, we also broke below our moving average band, specifically the 8 period. And this was when I entered the trade. I entered the trade right at the break here, and my stop loss at this trade was placed at high of day right here. Okay, so that was the trade ideology, and it ended up going quite well. There was many opportunities to exit this trade. I believe I exited the trade right here at the retest of the upper ORB, and that's perfectly normal, right? I was not going to sit here and gamble on the idea that this thing's going to continue to the downside. Obviously, it did, but Logan Silver talked about how he uses ORB as both breaks and retests for price action to make his decisions on, and I do the same thing here. And we did see a little bit of a doji pattern kind of form, and that was my exit right there. So this thing could have easily rebounded and made its way up, but it decided to continue to the downside. And if you set a stop loss, an automatic one, and you were away from your desk, you would have been able to capture this whole thing, right? You would have just sat in the trade all day because it obviously never went back to all-time highs, that high of day. So that was a very nice trade setup I took using very minimal things. Obviously, I'm considering the ORB. I believe I consider Vwop, but again, it's kind of a pain in the ass to apply anchored Vwop on this unless I'm in replay mode. We can do that on one of the charts I'm about to show. But this is a very, very nice, I would say it's a quality grade A trade setup, okay? Even if it doesn't work out, it's still a trade that you should be taking, right? So yeah, very good.
I actually did play that retest that you have highlighted.
You, right here?
Yeah, I did.
What did you do? Did you go long?
I went long.
Okay, and then as soon as we broke, you got stopped out.
Yeah, exactly.
Right, yep, and the ideology is like 100% fine. Though Logan lost the trade, is it still a trade he should have taken? Perhaps.
I would take that setup every single time I saw it.
Okay, perfect. There you go. So, I mean, that goes to show, right? Just because something is a grade A setup doesn't always mean that it has to go your way, right? And that's part of trading, guys. You're not going to win every trade. And actually, just here shortly, I will be going over a loss that I took where I got faked out. But this is another wonderful trade setup that I took in the server, and I pinged it to all of you guys. We opened up the day fairly high. We opened up the day, what is this? From our close, we closed right here. We opened up almost a whole percent, right? Like 0.87, almost 0.9%. So SPY had a very, very green open. And we saw that we did open up. This is the 5-minute ORB. If we were to go to, let's say, a 15-minute chart, we could go over and view that. We can see that we did have a hard time breaking above the 15-minute ORB, but we eventually did get above it. So technically speaking, this did provide a long opportunity. If you were to hop in this right at the break of ORB, even right here during this fake out, you did see green, but that wasn't a very strong close. And we could see that, if you were just playing ORB, you definitely could have gotten faked out there. That's why it's important to use other indicators and other methods of observing the chart, right? So I quickly noticed that we were moving, right? We were moved up at this parabolic rate, so I didn't get in. I don't like to chase these aggressive green candles. And then I quickly noticed that we were in a consolidation of some kind. And, as we proceeded in this consolidation, this line right here became much more prevalent, and it actually kind of created itself, right? It didn't exist right? The line doesn't exist with one touch point. It doesn't really with two, but 3 touch points, then we could say, okay, yeah, this line exists, right? It's prevalent. And at this consolidation, I was like, okay, if we break this, I will go long. But unfortunately, we were unable to break this, and we went down down. We actually went back down to our bottom open range breakout. We broke below it, and this was very, very tricky. And if you guys don't know what day this was, I'll give you a second to think about it. But if you're wondering why this is so volatile, this was the FOMC meeting day, right? We did, I believe this was around 2 p.m., right? And the FOMC meeting came out. They said that they were doing interest rates. We saw a very, very strong move to the downside, guys. And if you were playing open range breakout and you noticed that we were getting rejected from this resistance here, you could have definitely went short, right? The moment we broke the bottom of our ORB, it gave a wonderful opportunity to play to the downside. But what happened? We quickly, very, very quickly slingshotted back up from our previous close, right, in that general area. We closed around here, and we saw price action get bought up very, very quickly. If we go to a 15-minute chart, this is nothing but a wick, I believe. Let's go here. Maybe I'm wrong. Yep, just a wick. Very nice. And you can see that price action quickly reversed from there. And at this point, I did not take a trade the entire day, but I quickly took a trade and I went long as soon as we broke this yellow descending resistance that we've been battling really since the beginning of the day, right? And sometimes you're not going to find, right? And this is a great example not only of TA, but this is a great example of being patient and waiting for that grade A setup, right? Majority of the day went by before I entered a trade, and that often happens, and that's okay, right? Just because the market opens, don't feel the need to go and ape into AMD calls or SPY calls just because you see everybody on Twitter doing it, right? Wait for grade A setups that you are confident in. Obviously, when I took this trade, I did have my stop loss down at the bottom ORB, because we obviously could have got rejected. And obviously from there, we did run, we ended up going pretty high. But that was just another really, really good trade setup. And to be quite honest with you, you could get rid of all the noise, right? We could get rid of our ORB. We can get rid of all these lines. We can get rid of everything. And you could have just played this descending resistance, right? And it would have been a beautiful, beautiful play. So guys, don't overcomplicate anything. Acknowledge what's in front of you. Sometimes it doesn't have to be super complicated. And I also believe we did get a 5-minute MACD cross right around here. Guys, MACD, don't sleep on it. It can often indicate momentum, right? Though MACD is a lagging indicator, it can often suggest and give you confluence towards a certain direction, right? And we did get a bullish 5-minute MACD cross before we broke this descending resistance. So you could have technically entered this trade a little earlier. It would have been very risky, but the opportunity was there just by using very, very simple methods and ideas, right? So moving on, again, I don't want to take too long because I want to leave time for questions. I do have a few more charts to show you guys, though. But this was a very, very nasty trade that I lost back on Friday. So if you guys don't know, I post my P&L on a Google Sheet at the end of every week, and I went perfect Monday through Thursday, and then Friday I had two pretty bad losses. They weren't too bad. I recovered. Losses are a thing, but I went perfect green the whole week, and then Friday I saw nothing but red. And this is kind of what happened to me. So this is a SPY trade that I took, and also the same idea kind of resides in QQQ. But we were riding this support level all the way up here throughout the day, right? We opened up down, we rode up to the top to our high of day here at around 440.89, and we chopped around. And I wasn't really sold on any super superior ideas. I was more or less just kind of observing the fact that we were in a consolidation, right? We started our low, our high, and then our price action began squeezing, right? We were making lower highs and higher lows, and we inevitably ended up breaking this support that we saw the entire day being respected, and I entered short on SPY around here, right around this break, when I saw that we were aggressively breaking to the downside. And guys, this is just a perfect example, and the reason why I'm showing it, and okay, I'm jumping around a little bit here, but the reason I'm showing this is because everybody gets faked out, right? You're not going to win every trade, and I want to say I did have a bearish ideology because we did kind of perform a double top here. Typically, this is a bullish pattern, right? Typically, this is a bullish continuation pattern, but I was not sold on the price action, so I did enter short. And if we go here to our replay button, we will quickly see, let's make the speed a little bit slower. We will quickly see what happened, right? Make it a little faster. Faster. There we go. Yeah. And we can see there we got rejected again, but price said, nada, I don't care, Austin, we are going higher. And that's exactly what price did, and that's why I got stopped out. And you would have been able to see if you completely ignored this line, right? You could have, there does seem to be like an inverse head and shoulders reversal pattern here on smaller time frames, and you could have played that wonderfully. Also, you could have played this breakout wonderfully as well. But yeah, I'm just kind of showing this because you're not going to win every trade, right? Not everything's going to be a perfect grade A setup, even though it seems like one. But yeah, this entire day, what were my mistakes? What did I learn? Well, for one, this was a bullish pattern. Two, the entire market was trending upwards, right? Market context. Oops. Yes. Market context, right? We were breaking out very, very aggressively from that big, massive descending resistance that we had on a macro time frame during this entire consolidation, right? We broke this pretty confidently. So there was no reason why I should have been short, right? That's silly. But again, it was quad witching. I was looking at other things, but really, I should have been paying attention to the overall trend and acknowledging very, very clear bullish price action, right? So that's my fault. I did not use my, I guess, my resources to the best of my advantage, but I guess I did have a valid ideology. It just didn't work out.
You definitely
So yeah,
did. I was actually in the same trade.
Right, that's a losing trade I had, unfortunately. Moving on, I'm going to start going through these a little bit quicker. This is back on SPY during February, late February, and this is not necessarily one trade, but a group of trades that you could have made all in relationship to one trend line. We can see here that SPY quickly developed this trend line where it was fighting it as resistance, right? We can make resistance red just to make everybody happy. We'll make the resistance levels red. And you can see that this trend line really became prevalent as soon as our second touch happened. And then when we were making lower lows, lower highs, and we ran up and we retested it again. This was a big moment, and we see that our 8 EMA and our 21 SMA, right, kind of like a MACD that I have on my chart here, we got a very, very convincing bullish cross, and that led to a very convincing breakout. We ended up running to the upside. We found a high at around 441, and we ended up coming down to touch this level many, many times while seeing bounces. So guys, my point is with this this chart that I'm showing you here is that not everything has to be like microscopically analyzed or on a 1-day time frame, right? This is a trend line that existed throughout multiple days, multiple trading sessions, and it was respected really throughout the entire week, right? And if you just played this one trend line throughout the entire week, it could have went and it did go very, very well for you, right? So that's just a really good example of kind of zooming out and playing the bigger picture, not necessarily just honing in on one day in like 1 minute and 2 minute candles, right? You can really get a lot of information from zooming out and seeing what kind of relationship price action has with past days and in previous weeks, right? So that's very important in viewing the macro side of things. What else did I have? I was about to say something about this, but I seem to have forgot. Oh well. Okay, moving on, and I'm going to conclude here, guys. I have like 2 more charts to show you, and these are all macro charts, and that is understanding where you are in the market context. I'm sure a lot of you guys got into trading options during this time right here when we were just going absolutely parabolic post-COVID, and that's fine. There's nothing wrong with that. A lot of people, a lot of really good traders I know actually started in that time, right? And there's nothing wrong with being a newer trader, right? It's absolutely okay, but it's important to zoom out and to realize that we are in a different market than we once were, right? This is the I believe this is the this is the 20 period SMA and the 30 period EMA, right? And if you guys don't know, these macro moving averages can often serve as major support and resistance levels for macro timeframes. And you can see here, SPY did in fact run after we capitulated with COVID, ran pretty hard and bounced off of this moving average band very, very consistently until we see, the start of the new year where we started to break down below it and we actually flipped our moving average into resistance, right? Which was once support turned into resistance. This is very much showing us that we are in a corrective phase of the market, and maybe is a good sign to tell us, hey, maybe we should be, careful playing the long side of the market. Maybe we should be careful over leveraging ourselves in trades. Maybe we should be careful swing trading, right? Because typically during corrections, you're going to have very, very crazy volatility, and by zooming out and viewing this will definitely assist you in your day trading, right? Very, very important to understand where you are on macro timeframes. A few more charts, guys, and we'll get going. This is Tesla. Again, this is me. I went over this chart many times, but during, when Tesla had its big bull run back up, I believe it was in November, back up to all-time highs around 1250, we were able to predict the top using Fibonacci extension and retracement levels. If you guys don't know what these circles are, these are just my indications of the points I was utilizing. So, for this extension, and we can get rid of all this extra stuff right here. Let's get rid of it all. We can see that this was the main one, right? We did an extension from our swing high to our swing low of our previous correction, and it gave us a golden ratio or a 1.618 level of around 1238, and we knew that that area was going to be big confluence for our next price target, and it's quite amazing that Tesla ended up topping out right at 1250. So that was a wonderful trade. Obviously, there were other trades that we took for reversals, right, being the the retracement levels, that $890, $900 level was very, very significant with Fibonacci levels. And also this bottom level between, 700 and 740, that was very, very, very significant. If you guys don't know how I got that, all I did was take this low right here from this correction, and I did an extension up to this high. And that gave me this 1.618 correction here. And this is all, guys, you don't have to go in. I'm not going to sit here and explain Fibonacci levels and how they work. We have a ton of educational content based on that. But pretty much all I'm explaining is how I view the market, how I go about a day of making decisions, right? And what I take into account when I make my decisions, both on the macro and micro time frames. Obviously, and one more last chart. This is Bitcoin. We're utilizing Fibonacci levels and Elliott wave principle to determine what Bitcoin is going to be doing. Quick little TA on Bitcoin. I believe Bitcoin will be going higher. 1, 2, 3, 4, 5. I believe we are in the process of a fifth wave, and we should be heading above our all-time high of around $70,000 within the mid to long term, right? It might not happen tomorrow, next month, or even 6 months from now, but Bitcoin does look bullish, right? And this is all shown. These very nice levels of support and resistance levels are all from acknowledging these points, all points considered, right? With Fibonacci levels, right? Fibonacci extensions and retracements. So yeah, guys, there's a lot that goes into trading, but that was just a quick overview about how I view the market, how Logan views the market. We could probably talk about this for, another 5 hours if we wanted to, and I'm sorry for blabbling on for so long. But yeah, I mean, that's really the overview. If you guys have any questions, I definitely encourage you to speak up. I know I went over a lot there. But yeah, that's about all I got. Logan, take the mic away.
Great stuff, bro. No, great stuff. And
awesome.
Yeah, I mean, it just so happens, guys, that Austin and I are looking at very similar things. Not always the exact same things, but again, similar principles for the most part. And we can't, unfortunately, distill our entire trading philosophy in this one video in this short time we have together. But we're more than happy to answer any questions you guys have and share whatever we can.
First question for you, though.
Yes, Kyle.
Let's go. Kyle O'Neill.
For both of you.
Let's go.
Commodities the past couple of weeks. What are your guys' markups? What were we looking at? Were you trading it?
Yeah. So, Logan, do you want to go first?
I do have some pretty amazing TA on wheat, I must say.
Yeah.
Yeah.
Awesome.
So personally, this is a long-winded answer, more due to the fact that these things more so rely on the fact that we are in an uncertain macro landscape. So I'm going to be posting my TA in live chat VC Mute just so we don't have to, have you guys keep on switching back and forth between screens. But I am looking at utilizing price patterns.
I unshared my screen, Logan.
Yeah, I noticed that.
Okay.
Yeah, so utilizing price patterns, I will share you guys my wave count and the TA that I'm currently looking at on wheat. But with the TA that I'm looking at on wheat and oil, it makes me think that there's going to be another escalation of some kind in the macro landscape because, technicals, in my opinion, do lead fundamentals. I think we're going to see something happen, and it's going to force these prices higher. So I will post that TA in just a second. Austin, how about you?
Yes, my apologies. I'm chewing food. I was hoping you talked for like another 2 minutes.
I could talk for another 2 minutes.
No, you're good. I swallowed it. I'm all right. So, yeah, commodities, right? It's like, what do you consider in the realm of commodities? Are we looking at energy? Are we going to be looking at, like Logan said, wheat? Are we going to be looking at precious metals? Are we viewing it all in a cluster in the same basket? I don't know.
Well, I would say that you probably, I guess in this case, yes.
You would think so, right? Well, the reason why I'm mentioning that is because the typical way, right, in your econ class, you're going to be taught that those are commodities, right? But, they don't. I wouldn't necessarily consider them all in the same boat of sharing relative volatility. I mean, I guess so far that has seemed true. But, I mean, energy has really been interesting to me. And energy has been acting inverse of the market. And then we have stuff like wheat going parabolic. We had nickel squeezing, right? It's like all this stuff is really just becoming increasingly more volatile. And just for that fact, you got to ask yourself the question, has this stuff topped, right? Is gas at an all-time high right now for the time being? Or not all-time high, but is gas at a local top? Right, what do you think, Kyle? Do you think gas is at a local top? You think the price that you see at the gas pump is going to go down from here?
I don't know. It's hard to tell.
It's likely no.
Yeah, I would agree with you. I would agree with you based on the... Well, I don't know, because I think macro events tell you otherwise. Because, you see Saudi Arabia selling price or selling oil under the normal price to China, and using their money to pay for it, right? They're
Yeah,
undermining the SWIFT system with that.
it absolutely could be a top, but when you look at probabilities, I mean, this would all happen in such a short amount of time, and I think people are very quickly to think like that this rally is over for commodities. Where I've been saying for a while, I think this correction could go on much, much longer than people think, and just because commodities aren't blasting off like just completely going parabolic all last week, I think they could be getting ready for another rally. And Logan, you have that's wheat, and then what else do we have?
That's wheat
Crude oil.
and
Yeah,
oil.
so
Or
you're
corn
expecting
anywhere?
another move. But
I am most definitely expecting another move, yes. And Kyle, you bring up a very interesting point, and then I think that the only flaw to that argument is the fact that we're arguing about, or not even arguing, but talking about U.S. oil prices. I think,
Yeah, but you have to see where the U.S. sources its oil from.
well, mainly Canada. 62% of U.S. oil imports are from
majority
Canada.
of it is from Canada.
Right, it's 62%. Though. You got to look at the other. I mean, I understand where you're getting at.
Right. I mean, it's all speculation. I mean, I think the $1 million question right now is what's going on with commodities, and I think the conclusion that me and Logan are going to tell you is that they might have another leg.
But this one's got like a lot of stuff too with it, though, too. I mean, like the suspension and stuff on this.
Sorry,
like,
Mafia, I have to meet you.
Yep.
Looking at, I've done a ton of research on fibs and LE wave theory. Would you consider this 5-point move as valid?
Yeah, that's a tough one. I don't know. I question that first wave, but potentially. I would have to zoom out and look at prior price action. What equity or asset is this on? SPY. Okay, I should have known that. I guess it looks like SPY. Yeah, that's the FOMC correction right there. Yeah. I mean, I would consider that a potential 5-wave move. Sure. Yep.
It's definitely a potential
Logan.
5-wave move. The only thing that I would say is that if price followed your yellow lines exactly, that would mean that wave 4 would end in the price territory of wave 1. And one of the rules states that wave 4 cannot end in the price territory of wave 1. But if we didn't follow that exactly, and perhaps we ended wave 4 a little bit above wave 1, then yes, completely valid. But again, the only real way to answer this question is if we could analyze this specific thing and then drop down to our subdivisions. And all subdivisions are is, being able to spot a 5-wave move on a smaller time frame within your wave 1 or within your wave 3. That's the only real way of identifying if this 5-wave move is valid.
Yeah, I mean, in Logan, you can say this. I mean, does that move look impulsive to you? I mean, it does to me, right?
It most definitely.
It definitely has the characteristics of an impulse wave. So
definitely.
Yeah. So, and guys, I encourage you, if you want to speak up with your mics, perfectly fine with that. Oh, Logan, here's a question for you.
I just got an internship with a market data company, and I'm starting to work with commodities and FX spot interest swaps and derivatives. Is this something you guys would go more into? I'm actually learning more about those things right now. So if you have any actual questions, if I can answer them adequately, then yeah, absolutely. But great question, Kyle.
Yeah.
Logan, where'd you send that to you? I'm sorry.
It's right in
the
live
TA's
chat,
in live
VC
chat
mute.
VC mute.
Yep.
Oh, I got it. Thank you, guys.
So yeah, Logan, I mean, that's all I got.
I just wish we could be able to convey more just off of, what we were going over. Because there's obviously so much that goes into our day-to-day, analysis and how we're viewing the market. We can only share so much here just because of the fact that we only are thinking about so much at this current time. But
yeah, and you know what? What is this? Looking at the research of fibs, the 50 level is generally ignored. The 50 level. Yeah, so I'm when I'm doing Fibonacci extensions or retracements, I'm looking, right, for retracements, I'm looking at the 0.618, the 0.382, those are the main ones I'm looking at, 0.382, 0.618, and then for extensions, 1.618, 1.272, 2.618, right? There's very specific ones I'm looking at. Logan, I mean, do you really go out of the realm? Like, what are you looking at?
I use
What's
the
your
50.
big levels?
I do personally use the 50 for corrections. I use the 38.2, the 50, and the 6.218, but same extensions as you. 1.272 and 1.618.
I'm not a big 50 level guy. I don't usually apply those on my fib levels. But
even if you don't apply them, when you do draw them, you are acknowledging that because it's directly in the middle of the 38.2 and 6.218.
Right.
But yeah, guys, I would highly recommend checking out ORB, Anchored Vwop if you trade stocks, MACD.
Oh, Anchored Vwop's great.
Yeah, Anchored Vwop is very, very great. Been using it quite a lot recently.
Yeah, guys. I mean, another thing, right? I was talking to Andrew, the CEO of Quant Data, on Instagram Live the other day, and he has really good insight. If you guys don't know, right? He has really good insight into Wall Street. He has a lot of experience with talking to those people and knowing what goes on. And he tells me, he's like, a lot of the people on the floor on Wall Street, they're using Vwop, they're using Anchored Vwop, they're using MACD, right? They're using these things. So it's always good to use indicators that are being used by the big guys, right? Because if they see something, you might see it too, and they can make the stock go up and you can't. So, yeah.
What other indicators do you think are the most important to use besides, the ones that we just went over?
Yeah, so we didn't touch on a relative strength index. An RSI is great for not only obviously spotting if something's super overvalued or undervalued in a current time frame, but it's also great for spotting divergences, right? Bullish and bearish divergences. So the RSI is always a great tool to have with your MACD. Obviously, I will mess around with a stochastic RSI sometimes, but essentially you're getting the same thing very similar to a MACD. So, some sort of stochastic. What else? Volume profiles. Yeah, volume profiles are very significant. Visible, what is it? Is it VR? No. Volume profile visible range. Yeah, so that pretty much just shows the break-even price for everybody in a given range, right? So where the most buyers were in a market or where the most open interest in volume was. That's a very, very significant supply zone, demand zone. So typically price will bounce off of that. If you guys want to apply that indicator, it's called VPVR. Very, very useful. And if you guys don't know what it is, I can definitely show you a chart of that real quick. I'll just send it into live chat VC mute. But it's these sidebars, right, that pop up on your y-axis. So it's a little bit different than your normal volume that will be on your x-axis, but this will be on your y-axis. And this is just a quick chart provided in live chat DC mute right there. Very, very good indicator. I use it all the time. Logan, do you have anything else?
On the top of my head, not that I can think of.
Alrighty. Sweet. Alrighty, guys. So I think we'll wrap things up here. I appreciate everybody coming out. Right? Yeah.
Absolutely.
Logan looking sharp in that.
Oh,
that
thank you.
Thumbnail. Looking sharp.
But guys, I do want to quickly say, if anybody was more curious about more specifics, we did have a biweekly call on our exit strategies, where we're going about placing our stop losses. Entries we did kind of go over today. We've touched on a lot in our biweekly live calls. If there's anything that we did not answer for you today, be sure to send us a message in chat. We can clarify anything. But we also do have, God damn, Alex, you are fast. We do have biweekly calls on a lot of subjects, and Alex just very graciously posted the exit strategies class. So definitely recommend to check those out.
Absolutely. And guys, yes, I'm so happy you said that. Let's go EHCM Investments. Love it. That's why we're here, to learn something. And guys, it's important. Remember, tomorrow we will have our watch list coming out later in the day on a Sunday, so keep an eye out for those. There's going to be a lot of good information within the watch list, so keep an eye on your analyst channels for that. Get the most out of OBR, right? Join these bi-weeklies, join these live calls during the day, utilize the server. I don't bite. You can message me, you can talk to me. I'm a really easygoing guy. You don't have to talk like a professional around me or Logan, right? Like, we're very chill, laid back, and we're here to not only make money, but we're also here to have a good time and be a part of a great community. So, and that's very, very important. So, yeah, without further ado, I'm going to head out.
Yeah,
Thanks
I hope
for having
everybody
me,
has a
Logan.
great rest of
awesome.
their weekend.
Yes. All right, take it easy, guys.
Cool.
Bye-bye.
Thank you.